India has a problem with black money. The Indian Prime Minister, Narendra Modi, surprised his nation with the announcement that the currency notes of rupees 500 and 1,000 would no longer be legal tender in the country. This decision to call off its two biggest banknotes is part of a grand scheme to abolish corruption and black money holdings. As per the annual report of the Reserve Bank of India on the 31st of March 2016, the total value of the banknotes in circulation was 16.42 lakh crore rupees, of which roughly 86% were 500 and 1,000 rupee notes. The Central Bureau was rumored to have estimated the black money in India to be around 25 lakh crore rupees back in 2012. Black money refers to money which is earned through illegal activities. Such illegal activities use hard cash as their primary mode of financial transactions. And as these are all under the table transactions, they are kept away from the eyes and ears of the tax department. Black money could also be the cash that was earned through a legitimate business, but evades taxation through manipulation of the accounts book. In India, the initiation of black money is relatively easy. For example, an employer promises to pay his employee 10,000 rupees, but gets him to sign a salary voucher for 12,000 rupees. 2,000 extra rupees is thus shown as money spent on labor expense, but was actually converted into black money. So, let's say that same employee goes to the local store to buy groceries and makes his purchase, but the store doesn't give him a receipt. This purchase will not be recorded in the accounts of the store and thus evades tax. More black money. Then, the store owner goes to purchase a piece of land with a market price of 50 lakh rupees. He pays only 40 lakh in legal money as stated in the papers and pays the remaining 10 lakh rupees under the table to avoid a little bit of tax by both parties in a mutual agreement. On the way home, the seller of the land gets drunk celebrating his big sale and gets caught by a cop for driving under the influence of alcohol. He bribes the cop to turn a blind eye, and that bribed amount is black money, and given the journey that money has taken, is virtually untraceable. The Indian government has two main sources of revenue: tax revenue and non-tax revenue. Income tax, corporation tax, wealth tax, gift tax, customs, etc. are all sources of tax revenues. Interest receipts, that is, the revenue that the central government gains as interest on the loans it has advanced to the state governments, is a form of non-taxable revenue. Railways, profits of public enterprises, fees, penalties, etc. are all also a part of non-taxable revenue for the government. Of these two modes of income, the tax revenues trump the non-tax revenues. According to statistics provided by the Income Tax Department of India, only 4.1% of the Indian population paid tax in 2016. Although it is true that the annual income of many Indians is below 2.5 lakh rupees, the minimum required to pay tax, a large number of the population simply do not pay tax. This will cripple the growth of any country and drastically change its course in the long run. Now, this is where the demonetization of the 500 and 1,000 rupee notes comes into picture. One cannot store in the bank the money earned by illegal means or the money that is kept illegally. If it goes to the bank, it then goes on the record. If it goes on record, then he or she will be held accountable for that sum. So, all this black money has to be stored away in hiding, And the easiest way to store large amounts of money in small areas is by ensuring that they are in the largest denomination as possible, the 500 and 1,000 rupee banknotes. But if these currency notes are soon going to become history, those in possession of them are left with two options. They can bring them out of hiding and pay tax for it, or if the tax should prove too cumbersome, then they can choose to consider them as just pieces of paper with no value, just like some Germans did in 1923, using their banknotes as wallpaper or as firewood for warmth. Demonetization can include substituting new notes of the same currency or completely replacing the former currency. Almost all countries around the world have at some point gone through demonetization for different reasons. Myanmar went through a series of demonetization phases to fight the black market. Out with the old and in with the new, said Australia, which withdrew all their paper currencies gradually in exchange for polymer notes. Zimbabwe, which went through an economic free fall in 2009, withdrew its currency completely and adopted US dollars as their legal tender. The European Union's adoption of the euro is an example of completely replacing the former currency with a new one. The Philippines is currently going through demonetization itself, introducing new banknotes in place of the old banknotes as they have become easier to counterfeit. This is not the first time India has gone through demonetization. In 1946, the Reserve Bank of India banned 1,000 and 10,000 rupee notes. 8 years later, they reintroduced 10,000 rupee notes along with new 5,000 rupee notes. Under the Morarji Desai government in 1978, India demonetized both the 5,000 and the 10,000 rupee notes. So this would be India's third go at demonetization. So, what happens if people choose not to bring out their black money and just abandon it? Would it be a loss for the government? Let's say the RBI has issued 100 1,000 rupee notes in total all over the country. Upon the announcement of its invalidity, everyone in possession of this 1,000 rupee note goes forward and exchanges it for the new currency, except one, Mr. X. 70 notes get returned to the bank in exchange for new notes. And the RBI knows 30 1,000 rupee currencies are still stuck somewhere, but they don't know where, and it simply doesn't matter. Those 30 notes are with Mr. X, who doesn't want anyone to have the knowledge that he has them. Possibly it was earned through illegal activities. If it was his hard-earned money and he just hadn't paid tax for them, he could just go to the bank, reveal his source of income, pay the tax, and a penalty on top of it as a fine. And maybe he'll get 20% of the money back, say 6 new 1,000 rupee notes. But if his source of income was unlawful, he might be looking at jail time should he reveal his sources to the authorities, in which case he decides to discard them. The deadline to exchange the old currency notes is the 30th of December 2016, and if Mr. X decides to destroy his illegal currency, those 30 burned notes will be considered to have been recovered by the RBI, irrespective of where they were or what happened to them. The RBI had already printed 100 new notes to replace the old ones, and only 70 of them were officially returned, so the remaining 30 is now in the possession of the RBI in its new form. The cost of printing one single 1,000 rupee note, according to the RBI, is 3 rupees 17 paise. For a 500 rupee note, it is 2 rupees 50 paise. This is the only thing that could be counted as a loss for the government when someone destroys their money, the cost of its printing. But the government had already decided to take that loss when it announced those notes invalid. They were going to destroy those old currency notes themselves in the end, so by destroying the 30 notes himself, Mr. X would only be saving the RBI some time and money. No scheme is 100% foolproof. While there still exists some pitfalls and loopholes, it still would not be worse than the present situation in India, where the black money is legally and freely used in the market and is indistinguishable from legitimate money. The government is hoping that by abolishing these notes, it will help fight crime and corruption.